Sup, freaks? This episode was brought to you by our good friends at CrowdHealth. CrowdHealth is here to help you reimagine how you pay your healthcare costs, how you take care of your healthcare. CrowdHealth is not health insurance. It's actually trying to get more and more people to walk away from the health insurance industry because it's an opaque black box where you throw money in, you don't really know what's going on with it, you don't know how your healthcare costs are being negotiated on your behalf by the health insurance companies. You really don't know if you're being taken care of or not. CrowdHealth is here to fix that. What you do when you join CrowdHealth is you join a community of people who are taking care of themselves and who really want to become sovereign with their healthcare. What you do is you become a member and you pay a monthly fee. That fee goes to a dedicated health account, a bank account that you control, that you have visibility into, that you can always take with you at the end of the day if you decide to move away from CrowdHealth. You pay that monthly subscription fee, and then if you ever have a health event, you bring your healthcare bill to the CrowdHealth team. They go to the doctor, negotiate your health expense down to a lower price because they actually work on your behalf as opposed to the insurance companies. And then you pay the first $500 of your healthcare cost, and then it goes out to the CrowdHealth community, and your bill is crowdsourced. To date, they've had 100% of their healthcare bills paid, and it's a beautiful thing. They're also adding a Bitcoin component where a portion of your monthly subscription fee will get put into Bitcoin, so you have your fiat dollars alongside your Bitcoin account. Again, you have access to both at the end of the day if you ever want to walk away from it. But again, it helps you lower your healthcare costs because they're there to negotiate on your behalf. It's a much more personal experience instead of calling a 1-800 number. When you become a CrowdHealth member, you have a dedicated health advocate who is the same person throughout your time with CrowdHealth, who's going to walk you through everything you need to do and make sure that you're getting the best care that you can get that you can possibly get. Go to joincrowdhealth.com/TFTC. The first 1,000 members of the Bitcoin community are going to get, using the code TFTC, are going to get $99 a month for the first 6 months of their healthcare, of their CrowdHealth cost. So go check this out. Me and my family, we use CrowdHealth. We've decided to opt out of the traditional health insurance industry. Again, it's very opaque. I feel like it doesn't really take care of us. So come join us in the CrowdHealth community. Use the code TFTC.
You've had a dynamic where money's become freer than free.
If you talk about a Fed just gone nuts, all the central banks going nuts.
So it's all acting like safe haven.
I believe that in a world where central bankers are tripping over themselves to devalue their currency, Bitcoin wins. In the world of fiat currencies, Bitcoin is the victor.
I mean, that's part of the bull case for Bitcoin.
If you're not paying attention, you probably should be.
I'm fucking tired.
Hell of a week.
Hell of a week. Hell of a last 2 weeks.
That's true. 2 weeks. Contagion and Bitcoin, the Pacific Bitcoin Conference.
I heard that was really good. I'm pretty bummed I missed it.
Yeah, it really was. The guys at Swan did a great job. Good vibes. Heart of Bitcoin crashing, and you wouldn't know it if you were at a Bitcoin conference.
Yeah, what was it like being there while the FTX news was breaking and they were going insolvent right in front of everybody's eyes?
I mean, based on the vibes, you wouldn't know anything was happening. There were some people who brought it up on stage in terms of discussing it, but it really was a Bitcoin conference. And I think that one of the best things about Bitcoin is that, I think one of the things that Saylor talked about when he was there is the need to increasingly differentiate. And I think that that's probably one of the hardest things for people on the outside looking in to understand is like, what is different about Bitcoin? Why can't Bitcoin be copied? Why, if you could make a copy of a Bitcoin, it's not inflationary? But that increasingly that discussion of why is Bitcoin different will come to the forefront. Mm-hmm. And, when I think about the differentiating thing about Bitcoin is when you're around a bunch of Bitcoiners, whether there's people building in the community or just people that actually see Bitcoin for what it is, that what is different about it is that when the market's collapsing, but Bitcoiners are born of the volatility. They're used to it, and that was the vibe at the conference. It was focused on what matters. And what matters is infrastructure, education, content, distribution of ideas. And that's what a lot of what last week was about.
Yeah. I totally agree. And that's what my focus this week has been. Getting invited on other shows to talk about FTX is to try to draw that clear distinction. We've got Bitcoin, and then everything else is noise.
Yeah, one of my biggest, one of the things I hate to see is when people say 99% of everything else. You know, it used to be 95%.
Yeah.
And now it's 99%. It's like, it's Bitcoin and 99% of everything else is going to fail, but that 1%, and that's the kind of mantra of Silicon Valley, old school, old world, fiat money thinking. And in the reality, it is 100% of everything else. Not 99, not 99.1, 100% of everything else.
You're just a toxic maxi pad.
No toxic. I hate the term maxi, by the way, but I'll use it.
I do as well. I mean,
Yeah, don't project.
I was mocking these people.
But yeah, I think that the reality is that no Bitcoiner was telling people to put their money on FTX. Not only just not to gamble it, but for the risk of having firms like that taking leverage and realistically creating casinos with unregistered securities. No Bitcoiner was doing that. So somebody was, and they weren't Bitcoiners.
No, and they obviously didn't listen to our last episode, which we recorded right after Celsius.
Or any episode.
Yes.
Or if they did listen to it, maybe the benefit is that they have to touch the hot stove to learn that. I wasn't around Bitcoin when Mt. Gox happened, but when I think that knowledge distribution is the most important thing for Bitcoin adoption. Some of that is writing books and essays. Some of the knowledge distribution is time in the market and experiencing pain.
Yes.
And that while we would hope to be able to eliminate some people's pain that they have to feel, that have fewer people touch the hot stove, by communicating ideas, understanding why Bitcoin is different from a fundamental perspective. But if you lose 150,000 Bitcoin at Celsius, or however much was deposited into FTX or BlockFi, and not to say that everything's 100% lost, but right now people can't get their funds. And
with FTX, it's 100% lost. They have 0 Bitcoin.
Oh, okay.
Literally 0.
How much was deposited?
I mean, there were claims of over 70,000 Bitcoin.
That's unbelievable.
Isn't it?
That's the thing about both Three Arrows and FTX, which doesn't add up, which is like, how did they lose all the money?
I want to know, Parker, where did all that money go?
Where'd it go? How are you that bad at trading?
Well, this is something
because they try to claim leverage, but it's like, show us the trades, and that's what the restructuring attorneys that get in there are going to have to do.
Well, that's why I want to bring this up with you particularly, because your history of your career, like at Heyman specifically, like part of your strategy at Heyman was trying to identify fraudulent businesses and shorting their stock and making the market aware of the fraud. Like, how does a fraud of this magnitude happen?
Realistically, a fraud of this magnitude, and I guess it's not to say only, but it was certainly aided by the fact that there was free money slushing around, and that, kind of like on this one, it kind of feels like the, what was the woman's name? Holmes?
Elizabeth
Holmes, where, there's ranges of conspiracy theories, but I would just say that people had FOMO. There was free money and FOMO, and that Silicon Valley wanted to get rich, and that allowed for, in the context of a private company with very little oversight. And I mean, the crazy thing about FTX is, like, again, everyone go independently verify, but the fact that they reportedly did not have a board, and the likes of Tiger Global, I believe, and Sequoia, Thoma Bravo, Paul Tudor Jones, that they were just throwing money, like, that that was either FOMO or, and I would believe it probably was, that they thought that it was going to be a 10x or 100x or this boy genius, but they failed to use common sense.
Yeah. I mean,
but where's the money still?
Where's the money? Marty Jones is going crazy inside right now. Like, where the fuck is the money?
Same with Three Arrows Capital.
These people didn't even have a bank account until earlier this year.
Show me the trade statements of them losing all the money.
They didn't even have a bank account until earlier this year. Like, how do you invest hundreds of millions of dollars and not like diligence? Like, hey, show me your bank records.
In an offshore exchange. You know, like.
How were they able to buy LedgerX? Like, that's a smoking gun to me too. LedgerX is CFTC regulated clearinghouse.
The only one, right?
Yes.
I think it's a DCM. It's either DCO or DCM.
DCMG?
Like, no, in terms of the regulatory licensing.
I'm not sure.
But I believe it is the only one. So yeah, it's like how are they approved as a purchaser? As
an acquirer of that CFTC regulated.
So much for regulators. You know, like, and they will use this to clamp down on regulation, but
this proves that the regulators.
I mean, you brought up kind of the work that I used to do, and you know, in this case, and I think there's just like it's like, in one case there's an obvious fraud or what appears to be a fraud, right? Like, where'd the money go? Like, how did so many people miss this? I think most realistically, some people really missed it and they had FOMO and they were throwing hundreds of millions of dollars, thinking that there was going to be a company worth $100 billion. As ridiculous as it sounds and as reckless, and based on the reputation of the people that threw that money, it defies belief in many ways. But then you have that happening. You have these, you know, grifter short sellers talking about Silvergate. You know, what I did was I stumbled upon an actual fraud. Spent 2 years working on it, combing over thousands of pages, hundreds of financial statements, and figuring out that a public company was saying things inconsistent with what was actually happening. And in that case, and again, it's also to make an example, in that case, that went on for 7 years. And then eventually the executives were charged by the DOJ and convicted. That took 7 years. And so, like, when people are talking about regulation this, regulation that, it's like, ultimately they come and clean up messes. And they really aren't there to prevent, or if they are, too often things go wrong. And so when I think about what might come down from this, it's just an excuse. And, like, to your point, the purchase of LedgerX, a regulated clearinghouse, that, like, there was a regulator that approved that purchase, right? And if all of these things were going on in the last 12 months, like,
they didn't even have a bank account when they made this purchase.
Yeah. Like, so the regulators are going to save what? You know, and that's ultimately why Bitcoin, being permissionless, censorship resistant, permissionless innovation, and that will ultimately be what wins, regardless of however or whatever happens from a regulatory perspective.
Yes. Are there any silver linings from all this?
I think that the silver lining is that when people go out and educate about Bitcoin and the fundamentals, that is very important work. I've personally found, like, my own writing to be valuable to myself and distilling my own thoughts, but have met a lot of people who've benefited from that. The silver lining in this is that more people will understand Bitcoin because of some real world experience rather than some deep fundamental thought. And both are valuable, but people losing billions of dollars worth of Bitcoin will tell them, I need to do something different next time. I need to combination of ensure that the people that I'm trusting are trustworthy. What are the signals if they're not? Or how do I eliminate trust? Because you can do that in Bitcoin. And it will also help expose to the world that there is something different about Bitcoin. And so those are two different silver linings. The people that were in the market that got burned, It's not to say certain of them won't make the same mistake again. Like, there are gamblers in the world, and there are people who make mistake after mistake. But a lot of people woke up because they got burned, and others who are observing it from the outside, it's becoming harder and harder to come away with a conclusion that there isn't something different about Bitcoin. So that is a market signal in itself.
Yeah. But there's one thing you said there. A bunch of people lost their Bitcoin. They never had it in the first place.
Well, for the people who bought it on the exchange, they never had it.
Yes.
But the people who deposited Bitcoin,
Yes.
they had Bitcoin at some point in
lost it.
time, and they deposited in that exchange. And now the reality is somebody else has that Bitcoin, and it's either still the people at Alameda, or they sold it and the market absorbed it. And an important part of this is the thing that makes Bitcoin work. There's a lot of things that obviously make Bitcoin work, but one of the fundamentals is that it eliminates moral hazard. It is the freest of markets. There is trial and error. You do stupid things, you win stupid prizes, but the people that bear the brunt of that are the people who take misguided risk.
Yes. And individually, these people are learning lessons. Not your keys, not your coins. Don't gamble with your Bitcoin. But collectively, as a market, the market's learning a lesson. Like, this is what a system with no lender of last resort looks like.
Yeah. Yeah. It's one of the jokes about the Federal Reserve System is the price stability mandate. And the saying in Bitcoin of 1 Bitcoin equals 1 Bitcoin. It's like, if you figured that one out, you figured something out about Bitcoin, that Bitcoin, because you cannot manipulate the supply of Bitcoin, you cannot manipulate its price. And what that results in is short-term volatility in the interest of long-term stability. The imbalances immediately being eliminated and we move forward. The herd gets culled, the trial and errors get resolved, and the market finds an equilibrium. In the Fed system and the dollar system, price stability, it basically rejects short-term volatility, short-term price discovery at the risk of long-term volatility. And so in this world, anyone who's adopting Bitcoin at this stage, which remains very early, has to tolerate all of the noise and all of the volatility, but that is the market working. That is the market eliminating moral hazard. Everyone is responsible for themselves. And when you have a market like that, you have a market that has to learn. Otherwise, the consequences are devastating.
Yes. That's one thing I worry, going back to like the lesson that this is what a system with no lender of last resort looks like. Are people going to point at that and be like, this is why we need the Fed? Like, how do we get out front and say, like, no, I mean, these are hard lessons that need to be learned. This is not why we need the Fed. This is why we need to construct these financial products and services in a way that ensures that that Bitcoin is not being lent out X amount of times behind your back.
Well, what I would say is, on one account, first, the dollar is wrecking more people, and its volatility is wrecking more people globally than Bitcoin could in its totality today, or that FTX ever could, because FTX is, in the grand scheme, a small blip in Bitcoin's history. And that, on a $25 trillion economy, 10% inflation, because that is the volatility, equates to 2.5 trillion. Bitcoin today, roughly 300 billion. It's a nascent store of value. It's both material, but at the same time still small in the grand scheme of things. But if you think about what 10% inflation means on a $25 trillion system, that is wreaking havoc. It's destroying people. It's destroying people from an economic calculation perspective. It's literally bleeding a large share of the population out, like suffocating them. So when people talk about Bitcoin's volatility, I point back to the dollar's volatility. The dollar's volatility is financial markets crashing, the credit markets collapsing, the printing of money, the 10% inflation. But then your question about the lender of last resort, the biggest joke about that is there's nothing about Bitcoin that prevents a lender of last resort. Because if you want a lender of last resort, you will just have to capitalize it. And if you want a lender of last resort and you need to capitalize it with Bitcoin, with a fixed supply, and you're a system of government, then that requires you to tax people. So there's nothing wrong with, quote, rainy day funds. Now, there's probably a reality that the further that you get away from the people living in an economy, like a town to a state to a nation, that if you're shipping your money off to a lender of last resort in a far off land, that they're not going to be using that money in a way that directly impacts your life. But that's what a lender of last resort functionally is, a rainy day fund. Now, that just, an individual has a rainy day fund, a family does, a local community does, township, city, etc. But more to the point, if we think about the fundamental, if you want a central bank that is a lender of last resort, fund it with Bitcoin. It's just that you won't be able to get free capital anymore. So that idea, like what would we do without the Fed? It's a misnomer, which is we would just live in a world where you can't print money. Where does the money come from? So I think when you get beneath the surface of that question of like, what if there isn't a lender of last resort? It's just a matter of, are you actually going to fund that lender of last resort, or are you going to give it this superpower to print money and live in a world where, while we all grew up knowing that money doesn't grow on trees, at a system level saying, oh, maybe that actually can happen, and that it's just reserved to 12 people that sit around a table and then get to allocate it how they want. So I think that at the end of the day, central banks will be rejected because people do not like taxes, and that when we're on a Bitcoin standard, there will be rainy day funds, but they will be tied to local communities, insurance, things like that.
Bitcoin mining permanent funds.
Yeah. I don't know if that is the rainy day fund, but
yeah, you rolled up into a permanent fund. You use the permanent fund as a rainy day fund.
Yeah.
As well as other activities you may need. Do you think this is an inflection point in the way that people interact with Bitcoin when they're interacting with a counterparty, a trusted third party? Is this proving Unchained's model?
I think that we generally over-index to the here and now. It is possible, but I wouldn't claim victory just yet.
You think the next step is like, oh, we're going to do proof of reserves?
I honestly believe proof of reserves is, it's not to say it's nonsensical. Like a fully reserved bank, and if you could prove it, but you're still, one, you're depending on trust. And one of the points that Piers brought up over the course last week is you can't prove that you don't have liabilities. And that is what has caused the greatest consequence of everything that we've seen here. So if you have 10 billion of assets, but you have 20 billion of liabilities, you might be able to prove that you have 10 billion of assets. You can't prove that you don't have a liability, and that's all dependent on trust. And so I do think, I always just think directionally. It's like, I don't know if it's a critical tipping point, but there are a shit ton of people that learned a very hard lesson. But I think that if you went back to Mount Gox, again, I was not there. But,
I was there.
But if you were there, you'd be like, people won't do this shit again.
Yeah.
People will learn. And it's remarkable how many scams these people can come up with and narratives that then you're like, holy shit, we forgot about Celsius. That was 5 months ago. Not to say we forgot about it, but it feels so far in the past. And that when that happened, there were a lot of people that saw that and left their money on BlockFi. And so what the people that were there will learn, and then there will be another cohort, and hopefully fewer of them will make the same mistakes as more and more people build up a critical mass of figuring out this constant struggle between trusting a custodian holding their own keys, where the more people have been in the market, the more they realize that that is the only way to create certainty.
Yeah. Yeah, people forgot 5 months ago.
Yeah.
BlockFi,
3 Arrows is probably dancing somewhere about FTX.
Kyle Davies was on CNBC yesterday.
Like, how do you bring that guy on CNBC? That's a joke.
I mean, they're trying to run with the narrative that Alameda used their visibility into FTX's trading book to target them and their positions. That's why they blew up. But it's become very obvious that they were taking out unsecuritized loans. And
but it's also like, well, where did 3 Arrows Capital money go? I'd be like, show me the trades. Show me where you lost money. And that's what a restructuring attorney is going to have to do.
Yeah.
Because they could have claimed that they lost money and just sent Bitcoin to the Bitcoin version of the Cayman Islands, right?
Yeah.
But the fact that that guy is on CNBC talking, that's like what's the guy from The Wolf of Wall Street?
Jordan Belfort.
It's like Jordan Belfort, like being an authority on anything.
Well, apparently he's a crypto authority now.
Yeah, right. I know. Like, that's the thing. And that's also just an aside. When you cut cable and then you go back and watch, like when I go to a hotel, like last week when I was at the Bitcoin conference, or Pacific Bitcoin, I when I'm in the hotel, I turn on CNBC in the morning, and it's like you can clearly see these are just actors.
Oh yeah.
I've
been tuning in all week.
Like like when you remove yourself from the financial news and then come back a while later, you're like, oh, these are like 2-bit actors talking about, just a different subject line. And the fact that the guy from 3 Arrows Capital who lost tens of billions of dollars, 5 billion, whatever it was, gets put on a soapbox. Like, that's fucking crazy.
Yeah. Drunk Jim Cramer just screaming about random stuff. And that's the other thing. They were all pumping FTX.
Yeah, he's definitely an actor. Like just an actor.
Yeah.
That guy.
So,
Jim Cramer.
Are we being vindicated right now?
I believe so.
Should we be dancing on graves?
We should be. I mean, I think that we should use the opportunities to educate about helping people not make the mistakes. And I particularly feel, not particularly, I think it's always important to not dance on the people's graves who lost their money. Like, they made a mistake, and there's a lot of noise out there, and there's a lot of culpability in terms of creating that noise, combination of selling false promises, the whole Solana bullshit. I fucking even hate saying any cryptocurrency word, but like, there's a lot of people rolling around in really expensive cars, living in multi-million-dollar lake houses
right here in the city
that have dumped just absolute, not just garbage, but like scams on like telling a story, having a program around telling a story. And so I think it's important to recognize that the people who lost money, like, it's very easy, like, it's very difficult to understand, or very easy to understand why people get caught up in it. And it's also very difficult to understand why Bitcoin is different.
Yeah.
And given the state of where many people are with their finances, the promise of potentially being able to put money in a casino slot and get a return is often too great to want to know why you're destined for misery. And so I do think we should be dancing on the graves. We should be dancing on the graves of the FTXs of the world, the Alamedas of the world, the people who run altcoin scams. There was the thread by Corey from Swan, who organized the conference last week, Pacific Bitcoin, but he was out basically saying, like, I was focused on 3 Arrows and then FTX and Alameda, and now it's A16Z.
The worst of the worst.
And those are the people whose graves we should be dancing on. But they're shapeshifters, and they'll find a new way to sell a narrative to a pension fund and extract fees. But also, like, there's a human element of it, and there's a lot of people that lost money that they couldn't afford to lose. And so much of the noise that's created in the space have been created by people who have a shit ton of money.
Yeah.
And those are functionally sociopaths.
Definitionally. No, you're talking about like going to raise from pension funds. I just think, obviously, you're an advisor at 1031. From the 1031 perspective, I mean, that's what, like, we've been pitching is like, hey, it's crazy that all these crypto funds have billions of dollars in AUM, and there's a pittance dedicated to Bitcoin only infrastructure.
Yeah, we saw how difficult it was. I mean, like 1031, again, the companies need to perform, but in terms of the fundraise was incredibly successful, and it was like incredibly difficult. That the work that Grant and Jonathan, you, Matt, Michael did was a huge step forward for Bitcoin. But when you see and you understand the amount of work that goes in to raising that amount of capital for 30 to 40 Bitcoin companies and what it can do, and then you see like I think I saw like Han Investments did like a $2.5 billion fund, or A16 does something similar. It's like these people are lighting money on fire. Like Coinbase investing in NFT bullshit lit billions of dollars on fire, probably at least $1 billion. The investments into BlockFi, the investments into FTX, that you can literally set money on fire if you are building in a categorically wrong plane. And that if just a small amount of that capital started shifting to Bitcoin, that it would have a massive outsized impact and wealth creation as a function of it. And hopefully more people learn about that. I mean, we were here last night in the Tribe event that you guys in the 1031, I guess I'm part of it too, but you guys have more ownership over it. That event, Doldrum's bear market, and here in the Bitcoin Commons, a bunch of investors hearing from founders and members of teams that are building real valuable infrastructure. That and more of that, and then the bit devs that followed it, like that's what reinforces me about Bitcoin, is that the outside world is noisy, but when you actually get into a room with Bitcoiners and people that are focused on building, it becomes very clear the signal and what exactly is different.
Yeah.
Maybe not exactly, but you start to see the stark contrast.
Mm-hmm. No, speaking of dancing on graves, at 1031, we've been able to do a little bit of that this week because, comparatively speaking, all the companies that we invested in are doing relatively okay, or most of them are doing great. You guys have had, I mean, it's a bittersweet week for you guys, but you guys had a lot of Bitcoin come your way because people finally realize and they go, shit, I need to take control of my keys. Yeah.
We did. It like there's no getting around though that this is an incredibly difficult market.
Yeah.
For for all companies in the space, including Bitcoin companies, including ours. Like we did in the, just as in the wake of Coinbase disclosing the fact that their client assets may be deemed to be unsecured liabilities and their clients might be deemed to be unsecured creditors in the event of a bankruptcy. We saw more clients than we'd ever seen come through after the Celsius mishap, or not mishap, but whatever happened there. The same thing was true. And then during the contagion of this week, we saw the same thing as well. Single highest number of consultations come through in a week, the number of Bitcoin amount of Bitcoin coming into the platform. That only happens because the way that we've structured our platform is to eliminate counterparty risk. And we do that in multiple ways, but people would not be depositing Bitcoin into an institution if it weren't built on their own private keys. And that despite that, like the way that I think about it is price is a function of adoption. And so we try to manage our business to control more controllables and to make our business less sensitive to price over time. But if price is a function of adoption, then a declining price is fewer people adopting Bitcoin, and there aren't nearly as many people adopting Bitcoin and catching a falling knife than when Bitcoin's going up. That people typically adopt Bitcoin for the first time in waves and when the price is moving higher, because what they are functionally doing is following a signal that people who had more information sent by accumulating in times like today. But this sustained drawdown has impacted our business. It's slowed growth rather than cause our business to collapse. And that did result in, earlier today, we announced that we were needing to cut some headcount because I would say while we are less impacted by price, we did not sufficiently plan for the sustained drawdown and the slowing growth in adoption, which albeit it is temporary. And, we really have to plan for the uncertainty to come, not just in terms of price volatility, but when does the next adoption wave happen? Because that adoption wave drives clients to us. So we do see these big waves of people coming through when there are the industry events that make counterparty risk top of mind, but also the broader system is strained, and that's also healthy because it is a stressor. It does add to Bitcoin's anti-fragility. It does add to Unchained's, but we are also impacted. Our clients' funds just are not at risk.
So, yeah, let's dive into it. You're taking on a different role as well, correct?
Yeah, and that will probably come as a little bit of a surprise to people, but I put out a post earlier today, just before we started recording. I'm actually moving to the board, and that was something that kind of began as a discussion earlier in the year as to a possibility of the future, in terms of me transitioning from my day-to-day role. It wasn't something that I was looking to do immediately at that time. But when kind of probably late last month, early this month, when our board beginning in earnest talking about the potential need to prepare for winter and to really reduce uncertainty in our business by being conservative, that I restarted discussions about that it might make sense to make that time now. But the important thing to reinforce both for our clients and for our team is that my role is evolving, but it's putting me in a position to ultimately be able to create more value at Unchained and to be able to continue to influence the company in the areas where I am most impactful, from a strategy perspective, helping to finance the needs of the business, and also being a key interface for key clients and key partners. And so I've been personally running real hard for 4 years, and there's a number of things that I'd like to achieve beyond just Unchained, and this affords me the opportunity to do that. But I do just want to say too, but for clients that, and in the post that I wrote called Texas Hedged, that the whole foundation of our business is based on people holding their own private keys. And that is why our business works. That's why in the face of FTX, we never had any exposure to FTX. I can't even consciously put that word in a sentence, or Alameda or 3 Arrows Capital or Celsius. We never lent client Bitcoin. We help people custody Bitcoin, holding their own private keys. We help people buy Bitcoin directly there. We do lend against Bitcoin, but we only do it on an asset-backed basis, and we do it without rehypothecating collateral. We've never incurred a loan loss. And so Unchained is in a very strong position, but I took the opportunity and, really appreciate Joe and Drew being interested in kind of helping meet me in the middle, and as well as our investors for having that confidence. And there's still some process and technicalities of making that move official, but that's the plan.
Yeah. I'm not gonna lie, I was a bit shocked, but this is I read the Texas Hedged post that you put out, and
How was it?
it was good. It was long.
Everything I do is long. It's long-winded.
I forget. You've told
Get
me
used to it.
You've told me the Texas Hedge story before. I forgot about it though. We are Texas Hedge.
Yeah, I think all Bitcoiners are. When the price of Bitcoin collapses, you buy more Bitcoin. That's doubling down. And if you know you're right, then you're able to do that. And that I think about everybody who's securing their wealth in Bitcoin for the long term as somebody who is creating value for Unchained. You become just a little bit more Texas hedged if you decide to build a Bitcoin company or have a Bitcoin podcast or write about Bitcoin. And that is what I'm going to do most immediately. I don't have an immediate plan other than getting my head above water to breathe some fresh air. But I am going to finish the Graduate and Suddenly book version, and that'll be something I'll try to get done in December.
Yeah. No, you have been running hard the last 4 years. The hardest working man in Bitcoin is what you've been referred to.
I get a little uncomfortable every time you say that.
Yeah, it's true though.
But I don't think I've missed a Houston or Austin meetup in like 18 months, maybe dating back. Well, that's when I started going to the Houston meetup. But no, I think that a big part of how we've built Unchained and the brand that we have is on the backs of the Bitcoiners that are on the team. We've got a lot of good Bitcoiners. Like, our culture is what defines us. If you talk to any of our clients, that will be what defines us. The foundation is multi-sig and people holding their own keys, but there is a real service there. And that building that culture was a combination of that team and being out in front of people and clients and helping them understand why Bitcoin's important, as well as why holding private keys is important. And so, it might not sound that much, but like when you add up, 18 meetups and 18 straight months in 2 different cities, and then making time to be in Dallas for meetups and Midland and meetups. I like to think about all Bitcoiners as having some Bitcoin hustle, but that did take a little bit of a toll, but we also create a lot of value, and it's been like managing Unchained day to day and helping really have it become the Bitcoin company that it is has been the most rewarding journey of my professional life by far. And now that I get to go do the same from the board, but have more time day to day to get back to writing. I've literally been trying to finish the Graduate and Suddenly book version since BitBlock Boom of 2021 and have made very little progress. But now I'll have some dedicated time to do that. But I also just want to reinforce for clients and everyone probably chirping on Twitter that kind of everything that we built, we've been right about the big things: Bitcoin, building on top of holding keys, eliminating counterparty risk, and that I'm very proud of. And that's why today, and I'm a client of Unchained. That's not changing, and I only do that because I'm not taking the counterparty risk of my own company, and that's what differentiates us, and that's the position that every client is in. And just look forward to the future, building Unchained, but from a different position, and getting to hang out more in the commons down here, because I am going to be helping to continue to lead and shape the vision for that, for the Bitcoin community here in Austin, and finishing the Graduate and Suddenly book and orange pilling more people.
Yeah, this is Parker's vision right here.
I think
Kaylee, you, me, but
yeah.
You always came in with like the fun.
I'm gonna be in here more often, getting more shit done.
Okay, so
you're the talent.
So I'm gonna get less shit done.
You're the talent. No, I'm gonna enable you to get more shit done.
Okay, good.
Yeah,
good. Yeah, no. Again, it's a bittersweet week. Because I've obviously am involved with a lot of different companies and sectors within Bitcoin, and it's happening across the board. I mean, mining is obviously going through a rough patch, just bear market. I was discussing it with people last night. It's definitely the hardest bear market since 2015, and if it continues on this pace, it might surpass it as probably the toughest bear market that Bitcoiners have experienced since it launched in 2009. And you have to figure that makes somewhat sense, considering this is the first time that Bitcoin has ever existed in this particular type of interest rate environment, with the Fed hiking rates and that liquidity drying up and overall markets freaking out, like what the hell is going on?
Yeah, I do agree that, the 2012 to 2015, there was a longer bear market, right? That was like more severe.
the beginning of 2014 is when Mt. Gox happened. And so 2014, 2015, and the price didn't go back to like $1,000 till late 2016.
Yeah.
Yeah.
So I think that, there's some recency bias in there, but when you think about
recency bias was 7 years ago.
No, I know, saying like this is like the worst. I wasn't even there, but I wanted to check your gut instincts on that. That I remember talking to a miner in 2017 or maybe it was 2018, and they were like, they're going to have to introduce inflation. Like, this is the worst market possible. Miners are dying, and now we're here. And it's like, if you total it up in terms of real purchasing power of that mining reward, where the Bitcoin network is able to pay for more security than it ever has before. I mean, if like we're looking on a trailing basis, obviously 2021 would be more, but over time that's increasing, and there's more hash rate coming online. And so someone is finding a way to produce Bitcoin cheaper and cheaper. Hashes are getting more and more efficient. And that just at the same time that those companies are struggling, what is happening underneath the surface is that the strongest are getting stronger. And that's how I think about Unchained too. It's like, yeah, we are taking a little bit of pain, but then what we are also doing is weatherizing.
Yes.
We are kind of tolerating and taking the stressor, and that will harden us, and then we will move forward. March 12th, 2020, that was more brutal than anything that has happened through the Three Arrows Coinbase post there. Or I guess I don't want to say it's just Coinbase, but after the Fed first started raising rates, this episode last week, March 12th, 2020, way worse than that. But everyone would look here and have the recency bias, be like, oh, this is the worst.
Yeah. Not yet. It's not 2015 yet. 2015, summer 2015.
I wasn't even there, and I have to
was the darkest time of my Bitcoin.
Back to it.
I was like 2 or 3 years in at that point. I was like, holy shit, this may end. People legitimately thought it was going to end.
It was right before I came along.
There was nobody on Twitter. Bitcoin talk was dying.
Early 2016, Brooks Dudley, we were going to go to the Masters, and he made me buy Bitcoin before we went. That was the cost that I had to pay to get a Masters ticket.
That's a good friend right there.
Yeah.
And that's a good carrot on the stick.
It is.
Some Masters tickets.
Yeah.
So I guess I want to wrap it up on the topic of what are your thoughts on, again, markets learning a big lesson right now. The main lesson is a lot of these exchanges and counterparties do not have the Bitcoin that you believe they owe you. Does this create FOMO? Does this really drive home the scarcity of Bitcoin for people? Obviously, the people get wiped out. Maybe they try to get back in. Most are probably likely in a scenario where they can't recover the position that they lost. But do you think for people sitting on the sidelines watching this who have been waiting for a particular price target to begin allocating to the space or seeing what's going on and be like, oh crap, there's actually not as much Bitcoin liquidity as I thought there was?
Yeah, I think that what happens naturally in these periods of Bitcoin's falling knife, that's how Bitcoin gets priced. And that's where equilibriums are found. And so I do think that Bitcoin is now starting to get to levels, and I do genuinely not like to think about price all that much, but it is a function of impacting our business, and it impacts Bitcoin, so you can't get around it. But that when Bitcoin starts to get cheap, and everybody, there is no market really, it's each individual that's pricing Bitcoin, and that when an event like last week happened and Bitcoin's down from 20,000 to 17,000, that is the market stepping in and catching a falling knife. And from my own experience and just people that I'm talking to, seeing people starting to wade in for the first time, as well as see people who had started to accumulate at the 50s and 60s coming back in. That's price discovery. And I don't necessarily think that it's an inflection point. I think that the inflection point will come when the Fed reverses course, and a whole new market of people will have seen that Bitcoin did not die, and that everything that Bitcoiners have been talking about, because the counterparty risk is the counterparty risk, and the silver lining there and what people will learn is I need to take this seriously, and that there's no way to get around the fact that the only way to create certainty is to secure your own Bitcoin keys. Otherwise, someone else is securing their own keys, and you can't know exactly how that's happening, or whether they are going to give you a Bitcoin or whether they're not. And then trust exists on a spectrum. The only way to create certainty is holding private keys. And so I think all of this is very important, but the macro, more people probably figured out Bitcoin when the Fed printed $3 trillion than the people that were probably probably maybe there's millions of people, but there's still relatively few people who will find the signal through that. And so what I'm looking more toward is what is happening in the dollar world. People cheering 7.7% inflation, albeit the dollar is falling apart and people can't see it because they don't understand what the economic ramifications are of the largest currency system in the world being as volatile as it is.
Yeah. All right. We're going to figure it out.
We're going to win.
We are going to win. I should say I do, because this is on my mind. I'm not shocked. That's what's happening with you moving to the board at Unchained, because I've known. We've talked about it behind the scenes. I said I was shocked earlier, but I was like, yeah.
I know that there's a lot of people that are going to be surprised, but it is something that I wanted, and it was a good way to create value for Unchained and for me to be able to pursue some wants and needs that I have, and also just a reinforcement to the team too, and to our clients for this matter. Like I couldn't have done that or couldn't have made that decision if not for all the strong leaders that exist on the team. Phil Geiger, Trey Sellers, Cam Stromey, Justine, Matt McManus, Jevy, Brian Milstein. Like our whole team is like full of rock solid Bitcoiners that aren't just enthusiasts but know how to execute. Michael Tanguma, Neil Woodfine, that those people are all there, and that's what afforded me the opportunity. And I'm gonna still be at every meetup, and I'll be at the Commons. I'm gonna be at the Houston meetup on Monday. Be there with my partner Dave Owls Across, and so I think that there will be a lot of people just with what's going on in the market, kind of concerned. But when people, or the people that actually have the signal, are clients, they know how to get a hold of me, and I'm going to be around. So I do know that it's a bit of a surprise, but that I think people who understand me probably know that it once they know that it's also not a surprise.
Yeah, I'm excited for this chapter. I'm excited for the comments. Yeah,
this is good for the comments.
It's not good for my ability to get work done, but
we're going to accelerate you.
Okay.
It's going to be the accelerator. My project is going to be your acceleration.
All right. It's been a long week. Let's go have some beers.
Let's do that.
All right. Peace and love, freaks. Tiki!